Today's number is 69.50. With most Wall Street analysts believing markets are going to continue to rally, some are actually saying we are not going to see a pullback. But could that be true if we lose the daily 20 moving average? In today's video, we talk about how important this level is for the coming weeks, and of course, what's happening right now on other markets, including Bitcoin and one of our favorites, which is the hedge of silver. This year, we've been talking about this thing going absolutely ballistic. It is, but could still the good times keep on rolling? Well, the data today will surprise you on what we've got potentially in store for us next when it comes to some of these shiny metals. Stocks, commodities, and cryptos, guys. This week's going to be big, and it all comes back to those jobs numbers. Let's have a look at where the flows are heading right now. See you soon. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be taking a look at the big data, the macro flow, and of course, the dark pool activity, because Wall Street has been pretty busy over the last week, making some big changes. From oil doing well to some of the tech stocks starting to have a pullback, what exactly is going on? Well, let's kick things off with the stories that are really making the rounds this weekend, and one of them has to do with the AI bubble. Basically, I've seen more posts on this, more hashtags, and more discussion about the idea that an AI bubble is about to explode pretty much this weekend. And I think a lot of the reason is because we didn't see a sell-off in the normal month of August or September. Now, that doesn't mean that October won't see a sell-off. So just remember that there are still some important things coming up very soon. But one of the big ones is, I always say when people mention the AI bubble, that generally means that it's not about to pop yet, and that pullbacks will usually be bought by more buyers. Why? Well, everyone's got to believe in the bubble and basically get euphoric, thinking that they're going to be the ones that are able to get out first. And when that tends to happen, then we get situations like the dot-com times. So who is calling for 69.50? Well, of course, one of the big bulls in the market, Tom Lee, is pretty bullish right now, and he is continuing to go with upside before any pullback. And one of the reasons is actually something that I like as well, which is the daily 200 moving average. You guys know I've used that for well over a decade, and I absolutely do love this particular indicator. Well worth putting on your charts if you haven't already. One of the things that he's saying is that we're not quite extended enough away from the 200 moving average. So often what will happen is markets will rally, they'll move far away from a moving average. Particularly, I like to use the weekly 20 as well. And then what will happen is we'll see a pullback. Now, if this is to go the same place that it did during the kind of turn that we saw in 22 into 23, then we may still have some upside. In fact, his estimation is potentially 15% upside in the S&P. But I think it's also important to note that pullbacks can occur for all sorts of different reasons. You'll note over here, we weren't that high, and all of a sudden we saw a pullback. And actually, Blue Kurtic did a chart for us. I'll just grab that here, which is the S&P 500 and its 200-day moving average. And you can see here we weren't super overbought at this point either. Remember, there are many different reasons for why a market can sell. The key is to really recognize whether it's a buying opportunity or whether it's something way, way bigger. Also, it's important to note the leverage in the market at the time. So, of course, that can really show you how fierce a turn would be. And we'll talk about that more when we look at the options soon. So from major breakouts or major bear market bottoms to the next 8% correction. Now, a lot of people are saying, well, it has to come pretty soon. Yeah, you'll find that 8% corrections are actually rarer in the markets than many people think. But in terms of what they would call, some people are calling new state bull market or whatever, anything like this, because we did go bear. Actually, this is the third highest ever recorded in terms of pullback from a instant bear market into rally. Now, why is this important? Well, basically, it's only got to do with 1966 and 1957. If you have a look at those, funnily enough, this one actually went further in 1957, and the 66 one, which is here, the orange, didn't do much from this point onwards until it eventually got that pullback. And I think that's the question. Are we going to go sideways for a little bit, or are we going to continue to see a massive rally? Well, the good signs are there if you're a bull into the end of the year. Now, of course, we will have earnings season coming up again very soon, but new highs in September are generally a good sign. And closing bullish in September generally ends up being very, very good when it comes to your stats into the end of the year. And this is something we've been talking about. Could we see a sell in October? Well, you can see here that some of the similar setups are saying yes. Like, will we generally see a very good November? Well, again, the answer is generally yes. You can see here S&P 500 performance after a green May, June, July, August, and September since 1950, which is quite rare, by the way. When that happens, October's a bit of a coin flip. November is very bullish indeed. And it does look like, even though we've got trade day or so left in September, we probably are going to close bullish. Now, another thing about October that you may not know is that it is also considered the most volatile month of the year, with basically the average realized volatility being 18 during this period of time, and the VIX usually crescendoing into it. Now, that doesn't mean go out and buy VIX calls or anything like that. That is not the trade for this type of thing. But what does tend to happen is we still see volatility. Remember, it's August, September, and October are the months that we always want to be watching. Tech companies by corporate bond market, you guys can see here that we have seen a bit of an uptick in overall bond sales in the sector this year, which is interesting because, again, the last time we saw bond sales getting up near these points were 2020 and 21, indicating that there's probably quite a lot of rollover actually happening. And US Economic Surprise Index is actually surging up. Now, I thought this chart was really interesting when we're looking at these interesting points of data, because generally this means that the US dollar will follow. In fact, when this has happened in the past, you can see it's got a pretty good track record of kind of front running a little bit about the dollar, and the dollar sometimes rallying or declining with US surprise indices. So yeah, interesting one, certainly worthwhile paying attention to, as we have seen the dollar, of course, find a surprise pickup over the last week or two. Another surprise that maybe is not so much to this community here, us, we're looking at this one, has been energy. Now, particularly about a week ago, we talked about the idea that energy was improving. That was that we started to see certain signs of flows coming back into that market. Now, there's all sorts of rumor mills and all reasons why and everything like that, but I did think it was interesting to point out that since August, the energy market, that is just XLE energy, has been keeping up with the S&P pretty much to a 1-to-1. And you may see on this chart, it has been a while since that's happened. So could this be a massive turn for that market? Are we about to see some type of reinflation come in? We've got some charts later on to talk about it, but realistically, it's always showing us that we have abundance in these markets. There are always different opportunities out there for us to take advantage of, and it's just up to us to be able to find where those flows are going, something we talk a lot about here on the channel. Remember when we did silver only 6, 7, 8 months ago, whenever it was, around that period, no one really cared about it. But it's been probably one of the best performing things of the year. So it's all about figuring it out, seeing the flows, and knowing when the activation happens. Speaking of that, smart money is starting to buy healthcare again. Now, they've been doing it for a little while. You can see since pretty much around Liberation Day, they've been buying up healthcare stocks, the insiders. And have they been right so far? Well, the answer is pretty much no. The actual healthcare sector, as you can see here, is just basing. It could be accumulating. It may break out soon in the future. This is certainly one of those ones that you've got to watch, because although the media is incredibly negative on it, although the market hasn't really been buying or doing anything with it, insiders continue to stack this sector. And if we do get breakouts in the future, hey, it could suddenly, just like that, be on the radar. So remember, it's about being like a chess player. You know, you've got to be a couple of steps ahead, and you've got to find these opportunities. Now, we mentioned silver before, and that's because silver has been going wild. It turns out that when silver swings up 66.6%, an interesting number there, without a 5% decline, this is actually pretty big. And when this has happened in the past, take a look at what happens 1 week later. Take a look, though, what happens when it comes to 6 months and 9 months later. More gains after this. And these are wild. I look here at the average after signal 1 year later, and I got to say I get a little bit excited about that number, 73%. What the? But 27, 16, these are big numbers. Events up, down, you can see here 10 to 3 when it comes to 9 months. So pretty good bullish stats. And you might say, well, it's all over for silver. Well, not based on these things. What can sometimes happen is we actually go into a super move. And when that happens, yeah, you probably want to be getting out of the metal because it can be terrible during certain times. You can see here what a crappy time to own silver over here. Just remember, there are times to own things and times not to. But in this case, yeah, it's certainly moving. It's moving quickly, and it may still have a decent amount further upside. Another one is Bitcoin. Bitcoin is at that really important level of first major support. Now, it's bounced a little bit off this 109,000 area, and we've already seen it go back up to around 111. But you've got to remember, this is an important level. If it does lose this zone, I think we might go into the just slightly under 100K, like maybe the 98K zone. And if that does happen, then I still think bulls are going to be around. There is more work to be done, I think, in the crypto markets. And most of it has to do with how many people are turning bullish. In fact, I'm not sure we've seen everyone in. Generally, I see more activity at the tops, specifically from new market opens, which is like retail traders coming in and absolutely going wild at the top. We also haven't really seen an alt season yet, which tends to be one of those markers for these crypto markets to top off. So things looking okay, and we'll bring that chart up very soon. Now let's go to dark pools for a moment. You guys are aware there have been a lot of dark pools. You can see here VOO cluster trades up here. And what that could signal is, it could signal a big sell, but it could also signal just a bit of a sideways market for a while, what we call a pullback in time. You can see here we've got a big one coming in from VOO as well, with massive clusters coming out of nowhere. Look at all those ones, massive amount of cluster trades. And some big ones from the Qs, which is, of course, one of the biggest indexes out there in terms of the NASDAQ. SPYG, another big S&P 500, monster trade up there. AVGO, and many others. Now, the key that I think is important with all those dark pools is that they're just all happening up at around these highs, which generally means the market starts to exhaust for a little bit. Now, it could keep rallying, anything's possible, but we've seen it a couple of times where we get so many clusters, we can get exhaustion at the peak. And if that happens, then remember, we are now, 2 weeks away from the cut itself. So, this is now the question. Are we going to do some sideways and then rally up and keep going, which is, of course, very good for the next 12 months in particular? Or are we going to see a significant pullback soon? And then we have to start saying, is this the scenario? I don't think it's going to be, but it's something that we need to keep in the back of our mind. That is, of course, the recessionary structure. Remember, the next 1 to 3 months and the types of market areas that are going up are going to tell us a lot about when we need to expect, if at all, a recession coming out of the US. And that's, of course, the $1 million question that a lot of people are trying to answer right now. Let's now have a look at the data for October. This is what we've talked about. Basically, if we go in pretty well into September, then generally October is the weaker month of the year. So certainly something to keep in the back of your mind. Is it going to be drastic? I don't think so. But still, it might be upwards of 5 to 8%, the garden variety pullback. And then, of course, if we do get that, will November be good? The chances are increasingly to the positive side there. Let's have a look at the S&P. Then we'll go to options. Then we'll go to the lead indicators. First up on the S&P, it had its big pullback. Now, well, when I say big pullback, the big first pullback, which is to the daily 20 moving average. So this is the best generally you get in a very, very aggressive trend. I'm not sure this is going to be it here, but you can see the reaction. Instantly, we got a bit of a bid coming off this, a lot of activity. Then we found a green session through, of course, the Friday. And this week we find non-farm payrolls. So that's the jobs numbers coming out. And if they're really poor, then maybe we decline under the 20. Now, underneath the 20, I think, is going to be fairly key, especially if we hold a couple of sessions below there. And I'll show you why as we zoom out here. So we've hit it once, twice, gapped underneath, but then the next day straight opened above it. That's 3, 4, 5, and then now 6. So at the moment, the greatest odds have been on buying the 20 moving average. If that fails though, especially for 2 or 3 sessions, then all of a sudden we open up what we call the weekly 20, which is one of my favorites. That's called mean reversion. We haven't done a mean reversion since rallying up all the way from April. And that's pretty rare. I mean, generally you get a bunch of mean reversions. You get one every kind of 6 to 8 months. So I guess we're due the mean reversion. And that would actually push us to around 6,300 at this stage. But you can see here the weekly closed as what we call a doji candle, which basically means the market is at what it considers kind of fair value for now, kind of a pullback in time. On the futures market action, you can see here the options low and high levels for, of course, the week ahead or the day ahead. And in terms of where we're going to open up, it's pretty much smack bang on around that resistance supply level. So you'll notice here that's that previous high. We're putting pressure on it at the time of this recording. And if we then pull down off this, then we're kind of continuing in a series of lower lows and lower highs. Now, there are, of course, cases why you'd want to buy here, which is the daily 20. This area in here now becomes probably the most important zone for you to be watching. And one of the things that you can also do is if you get a fixed range, you'll notice there's a decent amount of cluster in here as well, which is kind of suggesting that everything in here is where the big trades have been going through. So everything in here is where you expect structure to happen. Could we still sell here? Yes. If we rally through this high, are we going to make a new all-time high? Generally speaking, that's what you're pretty much thinking about. And yeah, the importance will be here. So it may be just like this for a little bit. It also could be a pullback. Daily 20 is going to show us the strength, I think, of this pullback, though. If we get underneath that zone, it's going to be a big deal. Let's now jump on over to the options markets for the next session. The key levels are going to be around that kind of 66.50 for the Monday session and 65.50 for the put side. You can see quite a lot of opportunity in there, and it kind of keeps going through that. There's a decent amount of options starting to flow through this market, guys. And again, it's really about which direction are we going to choose. It's unclear here which level is going to take control. We're at a very neutral style gamma at this point, so we're not actually seeing super positive or super negative gamma. So the decision might be made, maybe leading into non-farm payrolls, and we'll keep following that one. Tesla 450, almost there again. You know, this stock definitely going against the general news media and general information out there. But 450 is, of course, a level to watch. And Nvidia is continuing to stay sideways. If we get through 185, I think even the bears need to admit that at that point, you know, there's a good chance that Nvidia will go towards 200. It'll be in super positive gamma, and that will be very bullish. So for the bears, it's all about really making sure Nvidia also is not breaking out. That's going to be a big one. So 185, a point to watch. And for, of course, the Bitcoin markets, the markets still look like 60 is the level for IBIT, which is, of course, just below or around that support level that we've got at the moment. And 70 is the ultimate target for the calls, which puts us at all-time highs. So basically, we've got a huge buy pressure at 60, and we've got a huge sell pressure at around 70. And those are the two main levels in the markets at this stage. For gold, it's still all green, all good, and still seems to be pretty strong every time the market goes down. 340, a level to watch on GLD at the moment. We're kind of trading into the positive gamma territory. So again, get through 350, that'd be about 3,800, I think, for gold. Then we'd be looking to push even higher. Maybe we can get to that 4,000 level we've been discussing. US oil, what's going on here? Well, it is looking better. So we talked about how the last bulls were kind of sitting here. We've found buyers. We've come up to this point of resistance, looking for that double bottom kind of pattern. And of course, a bit of resistance. So there's a bit of selling going on. So some levels to watch this week, guys, are going to be a breakout of oil past 66.40. If that happens, then it may continue on with a pretty strong trade that we've started to come through, which is basically anything to do with oil is starting to be bought up. Here you've got oil services. They're breaking out of a pretty long-standing downward trend. And of course, we've got energy stocks starting to hold themselves versus the SPY. It's actually since July. I don't know why I said August, but it's July. So effectively over here, we've got oil stocks holding their own versus the S&P since the July period. And that's actually really important because it's not so much that people spot it straight away. It's a slow underbelly of market accumulation. So it looks like Wall Street's starting to do something with oil and they're starting to pick it up. Of course, like anything, each one of these sectors, they have their own risks. This one's risky because of geopolitical stuff. and all sorts of rumor mills. And also, it's very powerful to try to keep oil low, especially for governments. So you've got to remember that is all working against you. But still, what do you guys think in the comments down below? Is this the time for oil stocks? It's been a while since they've done very well. US dollar time hit the #1 trade area. So exactly as we thought, we'd have a little bit of problems there. Some take profits coming through. Remember, if US dollars break through 98.50, it really signals potential further squeeze to the upside, maybe with that surprise index kind of chart that we showed before. And you'll see here at the moment, the market is just kind of like hovering around. So still very important level, still looking for more structure on the dollar before really saying anything particular about that. What about gold? We can see here, rally, rally, rally. I mean, it is still very good. 3,800 plus, maybe we're going to 4K. You know, the market looks really strong. And silver looks even better. I got to say, I did not think silver would be at 46 just a few weeks ago when we were talking about 42, 43. I mean, yeah, I think the silver will make an all-time high, sure. But this is absolutely just blitzing. And I can't say that we're sad about it. I'm pretty sure most of us would be pretty happy if you're in this one. But it is rally on rally on rally. And realistically, the data stats still perform very well for silver over the next 6 to 12 months. So hopefully that metal can continue up there. Tesla, still dull, still going up. Very difficult to fight with. Certainly the 450 plus zone will be important for that stock. So if you're looking for more bullish kind of gamma, hopefully a 450 plus will get it there. And Nvidia is stuck in the middle of this pullback zone. So remember, 185 is key. If it gets through there, at least on the option side, it could push further. And that's leading into those 200 calls as well. Some people are going 250 to 260 on Nvidia. So the thing with this is if it does break through 185, it could really start the markets to rally even further again. So an important level to watch. Chinese market is still bullish. No real changes there. And yeah, the market structure is still pretty good and the flows are good. US 2K hit the 20 moving average like the S&P did. It's still bullish off these levels at this stage, guys. So obviously looking okay there. And the NASDAQ didn't quite hit the 20, but it's kind of doing these levels. So I think what's important this week is, will the bulls hold these levels? If they drop them, then, and of course the markets will then probably go negative gamma on the smaller options flows, then all of a sudden we're talking weekly 20. I do think October could bring that volatility as well, so you got to keep in mind out for that. But the good thing for, I guess, the bulls is that the markets have opened relatively strong across the board for the crypto market. So you can see here, Bitcoin came down to around that 108K, has found buyers. Level to watch, this last high here, 113 or 114. If that happens, could be kind of a good first bullish sign, and that would be really off the back of that first bullish sign, which is here. So I haven't lost my bullishness on Bitcoin. I still think it's bullish, and I still think we're going to get an all-time high. But again, I'm open to this as well. You've got to be open to things. So at this stage, 114 plus, I think that should solidify this being broken, then hopefully back to the all-time highs. And if we drop this level here, then maybe 98 first. And I'm sure there'll be a lot of stories and storylines going on if that does occur. Ethereum broke underneath, of course, 4,000. It needs to retake, I think, about 4250-ish area. And if that happens, then again, similar to Bitcoin, things are starting to look a little bit better. And this is that if this does instantly rally back up, so only a few sessions down below here, it also shows the strength of Wall Street probably accumulating it with all of their might. So that can push it through. But this week, guys, it's one piece of news that matters, and that is the jobs numbers coming out about the US. Remember, guys, it has changed the game now. The Fed has said we don't care about the inflation for now. We care only about the employment rate. So it's expected that the US will only put on around 51,000 jobs. I think the estimate is around 30K positive is currently replacement. So anything under that, the market's going to freak out and not like it. Anything above that is probably going to say, okay, whatever, don't worry about it. I know the numbers change, but there are reasons behind that. And of course, with all these numbers, don't really try to interpret them too much. Just look at what the flows are doing. If you enjoyed today's video, guys, remember to subscribe, smash that like button. Thank you so much for bearing with me this weekend. Getting this out was a little bit tougher this weekend. And I look forward to seeing you in the daily shows this week as we go through what exactly is going on in these markets. Will we see an October sell? And more importantly, really, should we continue to remain bullish, even in the adversity of what has been a very scary media run over the last 6 months. All right, thank you so much. We'll see you in the next one. Bye for now.